Welcome back. Well, our entire research team is joining in now to give us a list of top 10 stocks for the day. Let's begin first with Ekta. She has Cipla and Aurobindo Pharma on her radar. Ekta, hi, morning.
Hi, morning. Well, for Cipla, it's definitely going to be a piece of negative news because their Indore facility has received a warning letter from the US FDA. So just want to give you a timeline. In Feb of 2023, it was inspected, issued 8 observations by the US FDA. It was classified as official action indicated in August, and now they have received a warning letter in November. Now, the thing is that the impact is probably factored in because the warning letter was expected based on what the 8 observations were. And there is a delay in Advair generic, the inhaler, which is filed from this facility, which is already built into consensus estimates and the stock price, because the management has been talking about this quite a lot. So the new approvals will be put on hold from the Indore plant. They are working on a transfer of Advair generic to another site. Their likely launch is probably by early mid FY25, which is factored in. Now, for Aurobindo, it's a small piece of news, important that they have, the US FDA has inspected APL's Telangana unit with 0 observations and no action indicated on the facility. So it's business as usual from that particular plant and hence a positive.
Okay, thank you very much for that. Let's move on to Oberoi Realty, where there is some interesting news. Sonal, Oberoi Realty, we all know, is a very Mumbai-based real estate player. But now they have aspirations beyond Mumbai and they're foraying into Gurugram.
That's right. That's the main news, that they have made an expansion plan in the NCR market, something that they had been talking about for a long time now. This time, via a land acquisition, they will be entering the NCR market, 14.8 acres land in Gurugram. And the consideration for this one is around 597 crore rupees as per the company. The total development potential here will be 2.5 million square feet. And it is an interesting foray because the NCR market is heating up. The prices there have been going higher. And there's a lot of entrance from other listed players as well, the likes of Prestige and now Oberoi Realty as well. So we'll see how that pans out. But yes, this is an interesting piece news with respect to Oberoi Realty.
Got it. Thanks a lot for that, Sonal. Well, let's hop across to Abhishek. He's here to tell us about SBI cards and ESAF SFB. Abhishek?
Well, to begin with, the SBI card has given a clarification with respect to RBI norms. So they say that their capital adequacy ratio will reduce by 400 basis points of 4%. Remember that as of Q2 FY24, their capital adequacy ratio was at 23.3%. So if required, they'll raise a tier 2 capital, but they have no plans of raising money via equity. Increase in risk weights may lead to increase in borrowing costs for the industry. SBI card is a AAA rated entity and they have enough sources and diversified lender base to manage the impact of the equity or the capital adequacy ratio in their balance sheet. New rules will open opportunity for good quality customers acquisition is what the company has said. Coming on to ESAF SFB, the new listed player, they have reported their Q2 FY24 numbers and asset quality has deteriorated massively. So gross NPA in absolute value is up 68% quarter on quarter. Net NPA is up 54% quarter on quarter. Gross NPA ratio is at 2.64% versus 1.65% in the previous quarter. Net NPA ratio has also increased to 1.2% versus 0.8% sequentially. Calculation shows that there is slight improvement in their provision coverage ratio. AUM growth is weak at just 1.7% sequentially. Despite the fact that deposits are up more than 11% quarter on quarter. So the NII growth is at 36.5% YOY and about 2% quarter on quarter, while the PAT growth is at 143.35% YOY and up about 7.8% quarter on quarter on account of the fact that provisions have declined both YOY and quarter on quarter. So lower provisions have driven the PAT, but they have reported massive deterioration in the asset quality. Back to you.
All right, thanks a lot for that. Well, let's go across to Sonal. She's tracking some more stocks that are in the news. Sonal, over to you.
Well, there are 3 stocks on my radar today. Let me start with Nugent Software Technologies, because the company has a board meet scheduled on the 27th of November. That's next Monday, when they will consider an issue of bonus shares as well. So that means the stock could be in the green today. Keynes Tech, well, the board has approved a fundraise here to the tune of 1,400 crore rupees. This is via equity issuance. And Hikal, the next stock on our radar, there's some issues continue with their plans. Now, there were inconsistencies in several counts with respect to their pre-clearance applications, and that's the reason a warning has been issued to the compliance officer to ensure compliance. So that could be a bit of a dampener for the stock today.
Got it. All right. Thanks a lot for that, Sonal. Well, let's go to Upasna, who's joining us to tell us about a couple of companies that have won orders, Zentech as well as RITES. Upasna?
Zen Technologies has received new export order worth 42 crores, mainly in the defense simulators. Mind you that the company's order book stands at 1400 crores as of Q2 FY24, and company has given a revenue guidance of almost 450 crores in FY24, which currently stands at 198 crores as of H1 FY24. Moving forward towards REITs, the company was bidding for two tenders from CFM Mozambique. One was for the supply of 10 diesel electric locomotives and other was for the supply of 300 high-side wagons. Now, company has been awarded the tender for 10 diesel electric locomotives for a total value of almost $37,680,008, while the company has lost the second tender order, that is for almost 300 high-side wagons.
All right, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Aurobindo Pharma, Oberoi Realty, SBI Card, Newgen Software, Keynes Technologies, Zen Technology and RITES. While the stocks with negative news flow, there is Cipla, ESAF, Small Finance Bank and Hikal. But we also have a lot of brokerage notes coming through this morning. So Hormuz is joining in to tell us all the brokerage notes that you need to focus on for the day. Hormuz, good morning.
Morning, Sonia. And first up, I'll start off with NMDC, where Citi has maintained its buy rating on the stock and has increased its price target to 190 rupees from 160 earlier. And it says that it is expecting upside to domestic ore prices, although the management is non-committal about the same. And it also says that NMDC's fine prices are trading at a 20% plus discount to export parity, and that they have an headroom to rise by over 1,000 rupees a ton, although the rise may be slightly lower as domestic steel prices are facing a downside risk currently. On the valuation front, NMDC is trading at 3.8 times FY25 EV to EBITDA at an implied iron ore price of $115 a ton, and is also allowing a free cash flow yield of 8.5%. Next up, we have Indian Hotels, where UBS has maintained its buy rating and has increased its price target to 500 rupees from 410 earlier. It says that the market appears skeptical about the company's average room rate and occupancy growth amidst a surge in luxury supply from other competitors, but it remains positive on the overall demand-supply balance of the market. And UBS further says that Indian Hotels can continue to surprise on the average room rate, rooms and occupancy growth, and as a result, it has upgraded its EBITDA estimates by 9% and 18% ahead of consensus for FY25 and 26. And lastly, we have Jefferies, which met the management of 7 IT companies, and it says that the conversations with them suggest that the demand uncertainty continues to persist. And it says that the increased revenue leakage and deeper furloughs in the third quarter suggest that the near-term growth outlook continues to remain weak. Additionally, Jefferies said that calendar year 2024 budgets could be revised downwards, and that poses a risk to the FY25 consensus estimates of 7.7%. However, the management commentary is inspiring stability on margins, but due to rich valuations and with no clear improvement in demand, the brokerage chooses to remain selective on IT stocks. Back to you.
Hormuz, thank you very much for that. You know, there is another cautious note by Ambit on the technology sector, where they're saying that even after the cuts that we've seen, you know, after the Q2 numbers post the disappointment, the asking rate to achieve consensus expectations in FY25 is still very high. So they're saying that the asking rate for the top 5 IT companies, the tier 1 IT companies, from Q1, Q2, Q3, Q4, looking at the CQGR, is the highest in the last 6 years, ex of the COVID year, which had a COVID-related surge and, you know, etc. So they're saying that there is still scope for disappointments because the asking rate, the consensus expectations, is the highest. Asking rate to achieve the expectations is the highest in the last 6 years, ex of COVID impact. So that's another cautious note on IT this morning. But here's what we'll do. We'll get into a break. We'll come back. We'll be joined by a market expert, Prakash Diwan, for a fundamental stock analysis. Stay tuned.